April 29th, 2024. Difficult day for stop order traders. A lot of times what happens is when you go very sideways all day and the breakout starts, it'll move relatively quickly within, one bar. Or we tried to get a breakout here and ended up getting a two-legged pullback back to the sell climax high, the 61 high. And then we got one more big leg down. But a lot of times what can happen is if you go sideways all day and then you start to get the breakout, traders start to agree it's the breakout and they don't want to miss out because it's the first real breakout of the day. And so they end up basically front running it, and it makes the bars too big and too difficult to trade for a lot of stop order traders. We did get a measured move down. Generally, when the market breaks out, it tries to create some sort of measured move down. And we got a measured move down of the range that we were in for, I would say the vast majority of the day. So we got the breakout here and a two-legged pullback, and then the second leg down ended up touching the measured move of the trading range. Bar one, a big bull bar. It was follow through for the bulls. Bar one touched a really interesting price, and that price is 41.54.25. And the reason that's an interesting price is because of the monthly chart. 41.54.25 is the exact open or the exact midpoint of the month. Bulls want the midpoint or the month to close above the midpoint so that they can consider, even though it was a bear bar, they got to close above the midpoint and it's more bullish. And if the bears can get a close below the midpoint, it'll be a bit more bearish. So really interesting day tomorrow. Tomorrow is the last day of the month for trading. And so I think that it's going to be, this is going to be the price you have to pay a lot of attention to, the midpoint of the month, which is, so close. Reversal down, bar two, you can consider the big gap up one bull bar. And so you have follow through for the bulls on bar two, or on bar one, and a 2-bar reversal of bar two, a bear bar closing near its low. Good for the bears, but I'm not really sure how much lower we're going. We might go a little bit lower, but in general, I think that the bulls are going to get a second leg up. However, the pullback could be relatively deep. Bar three, a big bear bar closing somewhat near its low, but a big tail on the bottom. And if you notice, the bears who sold were not quite able to make 10 points. So you can see got to 10.25, and it needs to get to 10.5 points in order for traders to make 10 points, since they'll sell one tick below two, and it has to go one tick past their limit order. So traders who sold below two ended up not making 10 points. So bar three, it's such a big bar that a lot of traders, when they see it, if they sold below two, they're very happy with what they made, and they'll just exit, and that causes a reversal up like bar four. A second leg down on bar five for the bears. So 1, 2, or 2, 3 good bars for the bears, and then 5 second leg down. 6, a bull reversal, but I think hard to buy. 4, 5, 6 is a tight trading range. It's on the open of the day, so it's probably okay to buy. But my problem is, it would have been better to buy below 6 than above 6. And what that means is that it really doesn't seem that great to buy above 6 and put a stop below 5 or 3 or something, because these are areas where you should be buying more, because we have good bull bars here and good reversals. So even if we do go a little bit lower, there's probably going to be buyers down here. So I think it's kind of tough to buy above 6 and put a stop down here. I think what you should do is buy above 6, be prepared to buy more, below 6 or below 3, and then use maybe a measured move down of a stop around yesterday's close. And just, if you get a big bear bar closing near its low down here, you probably just get out. And instead, or, if you start to get a reversal up, then obviously, like I said, you buy more. But instead, we ended up getting the rally. And another reason why I wouldn't, buy above 6 without the wide stop is usually if you're buying above 6, it'd be easier to add on higher or to just wait for the breakout. So if 7 closes on its high, you could have just bought 7 instead and had a better probability. Obviously, risk reward's a little worse, but I would say if you're buying above 6, you need to be willing to add on lower or higher. So that's a bit of a complicated trade in a tight trading range. 7 follow through, but a big tail on the top. Not ideal. Bulls need a good bull bar closing near its high. 8, they don't quite get the bull bar closing near its high. 9, again, disappointment. A lot of tails on these bars, so this is not an ideal breakout. I think that 2 and 3 was strong enough to make me think that this is probably going to be some sort of trading range open. And this rally is not overly convincing of anything otherwise. 10, a big doji bar, so disappointment for the bulls. It's kind of hard to stay long, I think, after you see 10. Some traders might exit below 10, but there's probably sellers above 10. And an outside bar on 11, another inside bar on 12. So it's an IOI, 10, 11, 12, and theoretically a buy above 12, but a 3-bar tight trading range at the top of an overall trading range is really not that great. So we end up getting a failed breakout above the IOI, and it would have been better to sell a bar like 14 had it been, some sort of bear reversal bar from the top. But instead, we end up getting it gets too big, and traders can't sell it. Another classic sign of a trading range when, nothing is what you want it to be. Everything ends up failing. 15, an inside bar, but probably better to just wait. Bears want, follow through to the downside from 14 and their second leg down. And bulls want 14 to be a bear trap, and they want to reversal up on 15. But 15, not really all that good of a bar. Probably sellers at the 13 low if we got there, since the bulls who bought below 13 were scaling in, and they know that they have to continue to scale in. If you bought below 13, you probably have to be willing to add more at the low of the day. You're buying the high of the trading range, so it's kind of hard to buy up that high, I think. 16, a bear bar, but a big tail on the bottom. So, this is really, difficult trading, I think. I would just rather wait. You can see we got a lower high on 13, and we might form some sort of higher high here, higher low here. So we're forming some sort of triangle in my mind. So 16, a bear bar, but a big tail on the bottom. 17, an inside bar. It's, a high one essentially for the bulls, but the middle of the trading range, really not very good. Follow through for the bulls on 18, bull bar, but a big tail. It's a low one short for the bears. And kind of bad follow through 19. Big tail on 20. Again, I don't think any of this is all that ideal. I'd rather just wait and see what happens. 21, a reversal up. So it's 3 pushes down, 14, 16, and 20. But do you really want to buy above 21? I don't really think so. I think it's just a trading range. And the follow through on 22 is really not that good either. 23, a big tail on the bottom. So I'm just waiting for a breakout at this point. I think we're forming a triangle, and I'd rather just wait and see what happens. A breakout to the upside would be consecutive bull bars maybe, and a breakout to the downside, maybe consecutive bear bars. 24, an inside bar. So theoretically a sell below 24, but I would rather wait and see the follow through. I don't think most traders want to sell 24 since we're towards the bottom of the bear channel. And we get a bear surprise on 25. I thought 25 was a reasonable sell. The problem is you're selling near the bottom of the trading range, right? But, we're still within the 18 bar range. And generally on a day where you're getting so much tight trading within the first, 25, 30 bars, there's usually a breakout around bar 24 to bar 30. And so when you're getting a breakout of the 18 bar range, a lot of times traders will put a stop to buy the high of the 18 bar range, or a stop to sell the low of the 18 bar range, especially when the daily range is pretty small, right? So the daily range is only 17 points at this point, and it could easily double to either side. So I thought reasonable to take a chance selling 25. But what do you do with 26? Well, there's kind of two schools of thought when you see 26. There's obviously the, sell below 25 and kind of just eat the loss, which is not, not ideal for sure. But some, a lot of traders, the smart ones, would sell if they sold below 25 and they see 26. They're thinking, oh, well, that might be a failed breakout of the 18 bar range. And if we end up getting a bull bar on 27, I'll be in a lot of trouble. So what those traders will do is they'll just exit. And you can see that's what's causing the rally on 25 is traders from 20 or on 27 is traders who sold 25 are disappointed in 26, and they're selling out of their or buying back their shorts, causing 27. An inside bar 28, good for the bears, but good for the bulls, or not really. Sorry, hold on, I got distracted. Pause the video for a second. 28, an inside bar, and a low one short for the bears, but a big tail on the bottom. And if the breakout was going to happen, it probably would have happened on 25 rather than here. So a lot less traders are believing in the bears, and now we need a lot more proof from the bears because now this just looks like the bottom of a trading range. Another inside bar, 29. So we have an II pattern towards the bottom of the trading range. Probably a reasonable buy above 29, betting that we end up getting the rally. But I think better to wait and see 30. 30 could be a second leg up or some sort of second leg trap, 27, 30. But we might have to reach the 13 low, since traders who bought the 13 low and scaled in lower should be able to make money. Follow through for the bulls, 31, 32, 33. But again, it's kind of like the rally from 7 to 10. It's just not doing anything spectacular. It's not doing a lot to make me think that we're going to override, the sell-off. And it makes me think we might form some sort of lower high and just go sideways. So follow through 33, 34, 35, or 33, 34. But I think it's hard to stay long below 35 because we can so easily just sell off. So I think a lot of traders will exit, maybe below 30, 35. We might just be testing the top of the channel, which is 15 high. So spike 14, channel 15 through 26. 36, big outside up, good for the bulls, but look where you are. You're high in the trading range near the 13 low and to the 15 high, which are resistance, and it's a third push up. So I think kind of hard to buy 36. You can definitely do it for a swing, but I would just wait and see if 37 is follow through. And instead, you get disappointment on 37, and then a bear bar closing near its low 38. Bulls are going to exit below 38, and I think it's a reasonable swing sell. Betting this is a wedge, and we're going to get a few legs sideways to down. But again, it's more of a trade because you're probably just going to get a few legs. You're probably not going to get, a big sell-off, and you get kind of a disappointing bar at 39. And if you'll notice, you think of 30 as essentially the spike. You could argue 27 is the spike and the rest was the channel, but 30 was kind of its own spike. And then we got the channel from 31 on, and we're essentially trying to test the bottom of the channel during 44. So we're trying to test the 31 low during 44. 40 bar 40, middle of the day. So maybe okay to look for some sort of reversal. And it's a bear bar, not really closing near its low, but I think it's a relatively reasonable sell for a swing. With that being said, it has a big tail on the top, so you're expecting a trade. You're not expecting a major reversal. Follow through 44, and then a bull bar closing near its high 40. Follow through 41, and then a bull bar closing near its high 42. It's a high 2 for the bulls, so you could argue it's a high 1. But if you had these 3 pushes up, and then this, what are you expecting? 2 legs sideways to down. And at this point, you've probably accomplished that. So some traders will buy above 42, but it's a small signal bar, so they'll use a wide stop. Maybe a little bit bigger than the height of the signal bar. You would have gotten away with the height of the signal bar on this, but I would use the height of the signal bar plus maybe 2 ticks. So whenever there's a small bar, you want to use a bit of a wider stop. Another prime example is 64, and this is why you don't use just the height of the signal bar because you would have gotten stopped out here. But that plus 2 ticks would have been reasonable. With that being said, you can buy there, and then you can see we go down 43, but a big tail, 44, but a big tail. So probably buyers below 42, like we said. And then reversal up 45. It's 3 pushes down. It's maybe okay to buy 45. It's a wedge, but we're right on the moving average is my problem with it. And I don't really like taking trades when we're right on the moving average. So instead, I would probably wait and see what we get. 46, tail on top, not ideal. 47, a good bull bar and a decent close. So let's see the follow through. And then we get follow through 48. So by the close, 48, always in long. Follow through 49, still always in long, but a big tail, 49 overlapping 48. And I think okay. To be long. And if you're long at this point, you need to think about your expectation of this trade. We're high in a trading range. You know that. So you need to be quick to get out. And the reality is if we're going to rally, we're going to go now. And you can see that 48, look, we rallied up on 48 and then went down on 49 and then rallied up again on 49. So what is this doing, right? On a lower time frame, 49 is creating a higher low. So if you're long up here, I honestly think it's okay to just pull your stop below 49 and hope 50 is a big bull bar. That's basically what you got to do, because you don't want to, because this can go against you. It definitely can, and you don't want to be sitting here with the stop all the way down here, and then you just lose a bunch of money. So 50, a bear bar closing kind of near its low, but I think bulls will exit below 50, which is why some bulls bought the close, and we got a good bull bar 51. And so at this point, you keep your stop below 50, you sit on your hands, and you hope that we start the upside rally. And instead, we got disappointment 52. 52, a double top, but in a tight trading range. 53, a bear bar closing near its low. Definitely a credible sell, 52. Doji bar 54, definitely a credible sell. And then a doji bar 55, which isn't ideal, but I think still okay to be short. Big bear bar 56, but micro double bottom, or big bear bar 55, but a big tail. Micro double bottom 56 around the buy climax low, so 45 to 49 buy climax. I think if you're short, it's really hard to hold above 56. I think most traders are going to get out. And then you get disappointment 57. 58, a bear bar with a big tail, but I'm not taking anything here. I would just rather be flat. We're in the middle of this trading range. This genuinely could just be one of the days where there's no good breakout. 59, it's 3 straight bear bars, but it could be, the second leg trap, and we're at, pretty near support. And then you get a follow through bar 60, but a tail on the bottom. It's okay to be short below 60. I, for the most part, just was really cautious at this point in the day because it just looks like a trading range day. And then a big bear bar, 61, closing around its midpoint. It's okay to be short for sure at this point. You're hoping that we're going to get a big breakout. And on the daily chart, sometimes what happens, if you think about it, if you had bought the close of this bar and you got this as follow through, what are you hoping you get here? You're hoping for a big follow through bar closing near its high. And we're within the last 30 bars of the day, right? At this point, or 20 bars of the day ish. So you got to be thinking, if this was a 5-minute bar, we'd be in the last minute or so of it. And what can happen a lot is if traders aren't getting the follow through they want, they'll just start to exit, and it'll cause a big bear bar closing near its low sometimes. So the same, the stock market is fractal, so the same thing can happen on this time frame. And essentially what this was traders hoping, or bears hoping, that bulls were about to give up because there was big risk. It's big risk, right? So you have to think about it that way. It's a big bar, big risk, and the follow through wasn't ideal. So you're thinking, well, we need to go. We need to go now if we're going to get this rally. And sometimes if you don't get it, traders will just start to exit and you'll get like an outside down day. So I thought the target here was traders were trying to get an outside down day, but obviously it did not end up happening. Doji followed through 62. It's still follow through. It's enough for a second leg. It's not good follow through, but bears did the absolute bare minimum for follow through on 62, which is get a non-bull close. 63, a lot of bears who sold the close of 61 really were not looking for 62. They were looking for a bar that looked like 25 if they sold the close of 61. Instead, they got 62. So a lot of them will exit on the close of it, and that causes 63. 64, it's a low one short. I think if you're taking it, you need a wide stop. Like I said, a measurement up plus a couple ticks is probably fine. It's a low probability trade. Disappointing follow through 65, and then 66 traps out a lot of traders with weak stops. And it tests the 61 high. 61 is a sell climax, so you know that we might try to test that sell climax high, which is, it's a trading range. So sell climax highs and buy climax lows are reasonable magnets. And then we get a big bear surprise, 67, and a failed breakout, 68. It's an okay buy above 68, but a big tail on the top, so not as good as it could be. Follow through 69, 70, 71, 72, 73. Disappointment 74, but I think, what are we rallying towards? Well, maybe the 67 high, but maybe just the open of the day. And you can see we closed basically right around the open of the day. So this ended up just being a vacuum test of some support, and then we got another vacuum test of the open of the day. So on trading range days, a lot of times you can get vacuum tests of the open of the day. So if you're expecting it to be a trading range day, okay to take the buy and hope we get up here. But I thought after, it was okay to buy above 68, but I was personally just pretty done with the day once I saw this, because I thought, if we were going to get the breakout, it was going to be here, and I thought it was difficult to take a buy with a big tail. Stop orders on the day, not a lot of good ones. 6 okay, but probably need the wide stop. I thought 25 was fine. Maybe I'm wrong. 30, maybe 36, but I think you're buying pretty high. 38 definitely, maybe 41. Maybe 45, definitely 47, or probably definitely 48, 49, I would think. But you got to get out quick somewhere up in here. You can't be getting out down here. And then sell, maybe 53, maybe 60. But nothing looked ideal. And then maybe 69. On the daily chart, doji bar. So tomorrow, if you bought here, it was a small bull close. So technically still follow through for the bulls. If you bought here, are you super thrilled with these? Not really. So big bar, big risk. I wouldn't be surprised if we started to pull back soon. And like I said, the big price in my mind to pay attention to tomorrow is the high of bar one today, 51, 54.25, because that is the exact midpoint of the month. And I think that if we stray too far away from it early in the day, we might try and make some sort of vacuum move towards it later in the day, which can often happen at the end of the month.